And welcome back to Bitcoin Advisors channel. My name is Chris Mitchell, and I am bringing you this lovely cryptocurrency video right from Westlake Village, California. Today is Monday, a new week of new opportunities, and guess what? It's 5:30 a.m. Or what is it? It's probably a little bit 5:46 a.m. And what did we do last week? I wanted to kind of recap here. We talked about the Shemitah. We talked about my top 10 altcoin portfolio, which is actually a short portfolio. And we talked about September, being the worst month in U.S. history for stocks. 8 out of 11 months for Bitcoin, or 8 out of the past 11 Septembers for Bitcoin have been down months. And we talked about inflation coming in hotter than expected. We had the FOMC meeting last week with the 75 basis point rate hike, and the stock market crash looming, housing crash looming. Still got the war in Ukraine nobody's really talking about. And the culmination of all these events happening at one time, it's kind of the cherry on the top. Not only did we mention that, bond yields are skyrocketing, and currencies around the world, they are absolutely plummeting. And look, they're talking about this big thing in Europe where gas is up 43, or I think they said 35. Gas prices in America are going to be up 35%. It's going to cost you a lot more to heat your home this year in America. And so, I don't know if it's the Shemitah. I don't know if it's September. I don't know if it's the dollar crashing or the dollar skyrocketing. Actually, I think that's one of the main drivers for risk assets going down right now. But I did want to play you a quick little kip from Scott Menard over at Guggenheim Investments. He kind of gave his thoughts, a couple of weeks ago about the markets, and I thought it was a bit interesting. Check this out. Got to load the ad first, of course. Trying to get this video to you here.
Those who act.
Oh, look at Laird Hamilton.
Those who see the correlation between things above and things below the surface. Those who navigate risk with a heightened awareness of what's possible.
Laird definitely navigates some risk up there, surfing those big waves.
You heard about this Fed meeting?
When?
Yeah, it's on Wednesday, 2 o'clock Eastern time, by the way. We'll get the decision. I mean, I got to ask you the most basic question. I'm sorry to even do it.
Are we going to raise rates
3/4 of a percent or 1%?
Or 75 basis
Yeah,
points? Well,
they're not going for more. I think 0.75%, I think, is the most likely outcome. I heard somebody the other day make a comment about 50, and I'm like, there is no way you're doing 50 because of where we're pricing Fed funds futures. But on the other hand, we can't rule out a full 1% increase. So, I think 1% would be better than 0.75% because there's more hiking to come, and they might as well just get it behind them.
Well, that's it. It feels, and you talked about this at the Milken Conference with us on camera. We did some events, which is, it's like the Fed's going 100 miles an hour in a car on a wet road, and there's a wreck up ahead. They got to slow down.
Right.
But it feels like they're trying to slow down sort of all at once, but too slow at the same time.
Right.
How does this end?
Well look, this is going to end in tears.
For who?
For investors.
this is
on
going
the
to
show?
end in
Yeah,
tears,
people that
guys.
are long risk assets.
People that are long
Hasn't it
risk
already? I mean,
assets.
this year's been awful.
Oh, well, it can get a lot worse. I mean, I commented a couple of weeks ago that I thought we had another 20% to the downside in stocks by October. But
There it is, right from the horse's mouth. The guy manages billions of dollars. Forget about what I say. No, I honestly, Mr. Guggenheim, Scott Menard, I watched his interview during the pandemic. And to be fair, a lot of people got it wrong, but he was not calling for a V-shaped recovery. I mean, hard to call the markets right on the spot on TV. So he doesn't get it right every time, but I agree with what he's saying right now. Then you got world-renowned investor Jeremy Grantham, right?
Now let's get to a big warning from a big bear. Investor Jeremy Grantham says the stock's super bubble that he warned about previously has yet to pop. The GMO co-founder sees more trouble ahead due to what he calls a dangerous mix of overvalued equities, bonds, and housing. Bloomberg's Danny Berger joins us now. So, Danny, it's not surprising that Jeremy Grantham is bearish, but people always find it very interesting.
Yeah, I mean, look, definitely a perma bear. It does feel.
Yeah, this guy is the perma bear, and he's been bearish probably for a little bit too long, but I think some of his predictions are on the brink of coming true.
Like in this current environment, Matt, though, the bears are the loudest in the room, if not the most plentiful.
I'll just end it with his quote here. Prepare for an epic finale. If history repeats, the play will once again be a tragedy. We must hope this time for a minor one. And just notice as, you know, society, you know, you've got this feminist agenda, you've got the transgender story time, you've got, you know, all this weird stuff going on. They're trying to get people all distracted with politics when it seems like the Fed and the powers that be and the powers that be in the WEF, right? They just want to weaken society, weaken families, you know, so that people are too weak to fight what's about to come. And I truly, truly believe the only way you're going to be able to fight what's going on out there is becoming, able to trade these markets, you know, whether you're in stocks or crypto or any other asset out there. There are ways to profit, you know, when there's a way to plant a seed in cement and make it grow, right? These economic circumstances are nearly impossible for people to make money right now, but if you have the right tools at your fingertips, and that's what we try and go over here. I'm going to try and go over some trade setups today. And for those of you who want to take advantage, I think there are some pretty darn good opportunities out there right now. And what do I want to start it off with? You know, you can see NASDAQ, S&P futures are down, Dow's popping up. So let's just kind of go across the markets on the daily time frame. Ethereum getting a little bit of a bounce as we're talking right now. Bear with me just a second. So heading out or starting it off with NASDAQ, and I would say this on the weekly time frame, we had a clear break below the 200 exponential. The next point of failure is really that white 200 simple, which I don't have on the screen at the moment. But we got a couple more levels to take out before the real crashy crash starts. And typically you do get a bounce off this region. But as I was telling a friend this weekend, I wouldn't be surprised if we kind of shoot right through it. Reason being, if everybody thinks we're going to get a bounce, usually the opposite happens, okay? S&P kind of sitting on the same level there, and the Dow actually shooting through it, and looks like the Dow wants to take a bigger leg down, but you know, kind of bouncing off support right here would make sense as well, at least on the first pass. Now, here is the harbinger of death and despair, and we talked about him last week. The dollar, as the dollar goes up, risk assets go down. And so let's just see if we can get an idea on some targets for the dollar. On the monthly time frame, we've been covering this for some time and saying, hey, look, here is a macro breakout on the US dollar. From this point to this point, using wicks, we are at the top side of that breakout. Now, if we use candle bodies, which is the more conservative way to go, we've already broke the 1618 and looks like we're heading up to the 2618. And I would say this, if the dollar can hold above 113, yeah, we're heading up to 120. If we start breaking back down below 113, 112, then, you know, maybe a short-term correction and bounce in the markets. But I wanted to be in early this week because, yeah, that Shemitah cycle, it was actually on the 25th, I believe, which is yesterday on Sunday. A lot of people ask, well, how's the market going to crash on Sunday? how's it going to crash on Monday when it's Rosh Hashanah and all my kids are out of school today? I do believe the stock market is still going to be open today. Don't quote me on it, but I see Bloomberg getting up, getting ready for the market rally. I didn't hear anything about the market being shut down today. But in my opinion, yep, dollar target, it would surely be met. And looking at a macro breakout up to 124.50, we would take out the previous high in 2002. And then, it probably ends in a blow off top. And just for kicks here, we've been talking about these cycles, the 7-year cycles. What did the dollar do in 1973 when the market tanked? Well, I believe that was a 18% rally. And when did the market really tank? Again in 1980 as we began to rally. That was Black Monday. Where they Paul Volckered us, right? When they raised interest rates from 1980 to 1983 or 1985, the dollar skyrocketed up to 160. So just imagine if we blew off the top and went way, way up there. But as soon as you take out this region, that is kind of the next major pivot on the dollar going back. This goes back to 1968, this chart. So just getting a macro view, dollar targets heading up towards 124 is literally the bearish thing on the board. You could probably look at that and nothing else and realize that stocks are in for a bit of a correction. Anyways, going back, let's see, from 95 from 95 we headed from 80 to 120. That was going into the dot-com bubble bursting. So anyways, I haven't really looked at the dollar on the macro for some time, and we are coming to the end of the month here very soon, September 26th today. So how many days left on the month? 4 days, 11 hours. All right. Moving on here to what else do we want? So as we said today, the dollar, if we hold above 113, which may be hard to do. Let's see where the Bollinger Bands are at. As long as we're closing above the topside Bollinger Band, dollar play is in motion. We're trending to the upside. We've been trending. And, consecutive closures above those topside Bollinger Bands is going to be bullish for the dollar. Just curious if we're hitting any targets based off of this. So short-term target looks like wants to come up to 115.72. I would not be surprised with that. However, let's see if this lines up using candle bodies. Yeah, so in very volatile moves, you're going to get up to the 423, which is probably using, if you use wicks, that's when you're looking for the more volatile moves. That heads us up to a 124. Okay, and as the dollar is coming down on the 4-hour time frame right now, we did just get pushed back on that 4-hour closure. That is a doji candle, a symbol of indecision. And just checking in on some of my other trades right now. And we're still looking very, very good. So, something about these doji candles, these candles of indecision, usually when you take out the bottom side of the wick or the top side of the wick, that'll get you the next kind of major move. So just looking at this, not really doing much else, and doing a simple fib retracement to the upside or to the downside using a bearish or bullish retracement. So this is a bullish retracement from the high to the low. Yeah, the next target up is to the topside Bollinger Band at 114. So, is the stock market closed today? Let's see. Is open on the weekdays, Monday through Friday. Nope, 9:30 a.m. to 4 p.m. 9 trading holidays are closed. Closed plus several, blah, blah, blah. So, looks like we are going to be open today for some trading. So, this, I mean, literally in step with stocks. So, as dollar came down, what happened? NASDAQ popped up. What's happening to Bitcoin? Bitcoin popping up. And this green 55 here has absolutely been phenomenal in calling these last few trades. And I'm back here. So one thing that my mentor has always told me is forget about the news. It ain't about the energy crisis. It's not about the war. It's not about the FOMC planning out inflation to be higher than expected. That doesn't move the price of Bitcoin. There's only one thing that moves the price, and it's this: an imbalance of buyers and sellers. Anybody telling you anything different is just full of baloney. So just write that one down in your journal. The only thing that moves the price is an imbalance of buyers and sellers. And how do we find out, what the big players are doing? The big footprints will show themselves in the charts, i.e. you see where you get large volume, right? Large volume, bigger footprints are in the charts there. But I do want to, bring us back to something we've been talking about a lot for the last few weeks, in fact, is the 2-day and 5-day time frame, giving a technical bias for more downside, and remembering this is the stochastic versus volatility metric we've been covering alongside bullish and bearish divergence. But the first thing I want to bring up here is the 2-day chart. And why do I want to bring this guy up? Well, the 2-day closed last night, and momentum is remaining to the downside. And the 2-day time frame, the average move to the downside is about 39%. The first standard deviation is going to be 32 to 46%. And that would bring Bitcoin's price down. And I just want to kind of recover it. If we hit the average downside move, it's about 39% on the 2-day time frame. So where was the signal given as volatility expanded and we crossed down right here? So I'm just going to mark this pivot off. So if you're looking at this saying, hey, Chris, this is the first time I'm on your channel, go ahead and smash that like button and subscribe. And everybody else, let's see if we can get a few likes on the video today. That would help us out, help us spread the word. So average move, 39%. When does the move begin? Well, when the Stokes cross down and volatility begins to expand. So you might be able to say, I would take it from this region, in fact. So 39% down from here on Bitcoin's price would be from the high here. In fact, we've been saying 42% is where we are looking for this move to land, because that is more in line with the 5-day move. The 5-day move's 42%, the 2-day's 39%. So just shaving off 39% would get us down to $12,000. And the same signal, which is still valid on the 5-day time frame. So Stokes are still down and will remain down as long as we are below 19,691. And 19,691. Okay, moving on to the 5-day signal, where the average move is 42%, which would get us down to that 11,500. The first standard deviation is between 35 and 49%. So 49% gets you down to 10,500. This signal began as the Stokes crossed down and volatility got above 20 percentile, which is going to be right here. So we have been measuring from this pivot right there, and Stokes down 49%. So, sorry, 42% is there at 11.5, and 49% is at 10.5. So if you're just coming to this channel and you're just seeing these signals and saying, hey, how could I trade this market based off of these signals? Well, I would say this, and again, this isn't financial advice. I'm not a financial advisor, but somebody looking to kind of, that's still a relatively big move ahead of us, and you might have that bearish bias. So what would I look at as an entry point? Well, typically I use these wicks here. And as soon as we get this daily closure below 17,500, which is going to be this pivot right here, I think, in fact, I will be entering the majority of some of my shorter positions as we close a daily below 17,500. I do believe that move will be initiated. Now, here's something interesting on the 4-hour time frame. Volatility is extremely low. We're about to cross up here with any kind of a closure above. Oh, sorry, we're already crossed up. So we're going to need a pretty strong rejection to get us back down. We'll cross down below 18,952. So the 4-hour time frame does have multiple drives of hidden bullish divergence coming from this point right here. We're going to have, let's see, 1, 2, 3. So that actually might be good enough if this does get confirmed as a local low. How would I confirm this? You want to see a candle body closure above that green 55. And I would be looking for a shot up to 20,200 at a minimum on this 4-hour time frame, and probably a shot all the way up to 20,500. If we do begin to break above this wick right here, I would say that we're probably going to get a rather large move to the upside, and all these signals that we're looking at to the downside begin to get invalidated, and price action would very, very likely take a leg up to this green 55 at 23,000. And again, I will still remain with the bearish bias as long as we are closing below 25,000 bucks on a weekly time frame. But for the short term, that might provide a good entry to get some of that downside action. But you could essentially play the same 2-day volatility move, looking for a 39% move to the upside with any kind of a closure above 20,500. Stokes will cross back up in another 1 day and 11 hours. But so what would 39% from this point up be? I mean, that would take us all the way up to that wick again, coming in at about 26,800. So just something to be aware of. Where's the invalidation on the other side? However, again, shorting this green 55 has been, pretty darn powerful over the next, just over the past few weeks, I would say. And that is where we're coming up to right now. So perhaps somebody looking to be a little more aggressive wants to take a short against that. If we do confirm another lower high here, it'll be multiple drives of bearish divergence on the 4-hour time frame. Coming all the way back from this pivot right here. And we do we have a descending triangle formulating? It looks like a regular triangle, actually. Let's take a look. Is it more prevalent on the CME chart? Let's see. How do we have it drawn out here? What about that 6-hour time frame? Volatility is beginning to expand, and the 6-hour will remain down as we are closing here in another 2 hours and 44 minutes below 19,159. As long as the 6-hour is down and volatility begins to expand there, I would expect, well, bottom line is I got the bearish bias in place because of the dollar, because of stocks, because of all the bearish news we've been talking about. And the big footprints on the 5-day and the 2-day time frame are still crossed down. CME's closes in another 1 day and 8 hours. So by tomorrow, we'll have another 5-day closure. And as long as we are below 19,412, as long as we are below that pivot, I would expect the downside move to continue. However, if we do cross up, that may be the signal that the move is over. All right. Video is getting a bit long here now, but I do want to cover a couple other coins that I have been exclusively shorting. And there was a lot of news about XRP over the weekend. And here's what I want to bring our attention to. This is called the death cross on the 5-day time frame. And I had somebody in my office come up to me and say, "Oh, XRP, I'm making so much money." And it was coming right into this zone about 2-3 days ago. And I said, look, this is a perfect death cross. When the 55 and the 200 cross, you want to see price action get sucked up into that area and then spit back out. And not only is it lining up with the green 55, crossing the purple 200 to the downside, but we have all these trend lines coming in place right here with a massive descending triangle. And I did see some live streams. There's some rumor going around that the XRP army is going to win the lawsuit. They're going to win the lawsuit. So you take it off a log scale, and these trend lines are going to come in pretty nicely here. No, still not coming in perfect, but close enough is close enough. Is that bringing in? Yes. So 3 touches to a trend line. What does that make? That makes a trend. So in some cases, it looks broken here. In some cases, it looks like it's holding up just perfectly. You know, usually these wicks are going to make or break the distance here, but I am drawing this out as a bit of a descending triangle. How does it look on the weekly? Do we get those 3 touches on the weekly? Yes, indeed we do. We do get them here. Is this perfectly drawn out? No. Is TA ever perfect? Yes. But it is more of an art form, less of a science. TA is not an exact science. It's more of an art form. And everybody has their own interpretation of these signals. And depending upon your trading biases, whether you're more conservative or more aggressive, right? Everybody's going to have different results. However, I would say this. XRP has been a big fat loser over time. Why is that? Well, in 2018, Bitcoin hit $20,000. XRP hit $3.32. Now, when Bitcoin in May of 21 was hitting $65,000 or $60,000, XRP did not even breach its all-time high. So anybody enlisted in the XRP army, just de-enlist. dishonorable discharge, okay? This is not what we call strength. It's weakness. It's a penny stock going to $0, okay? So just drop this thing like a hot rock. It's done. It's over. All right? That's my opinion. It's not financial advice. All right, I'm going to make the video a little bit shorter here. I'm going to take a look at another hot, stinking piece of garbage. Sorry, guys, I'm just playing here. But this is a penny stock rollover, okay? We did the full retrace, and I imagine we are going to do even more because JPEGs are not going to be successful in a bear market. Everything you want to buy now will be cheaper next year, including NFTs, okay? Sorry to break it to you. And I could be wrong, and this isn't financial advice. All right, next one up. Ethereum Classic on the daily time frame. We broke a major range to the downside. What is the range? From here to here. And this was a bit of a descending triangle, as you can see, coming all the way back from the, let's see if I can get this guy drawn out like this. Why am I not good with this thing? So I'm going to try again. So I want to do the opposite. Nope, it's not going to do it again. There we go. That's what I wanted. So look at this massive channel on Ethereum Classic. If this holds true, we're heading to the bottom side of this channel. It's been going back all the way from, let's see it on the weekly time frame. Now there's no rhyme or reason to this, right? Ethereum Classic. Trend line here, trend line here. Holding it up very nicely. How many touches on that trend line? 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. So the more touches to a trend line, the weaker it gets. And if you get below this pivot right here on the purple 200, you can see how low this thing can go here below 1969. So that is my first target on this guy is going to be 25, 23.59. Momentum is to the downside. How many drives of bearish divergence do we have? Coming back from this pivot right here. And this is weekly bearish divergence. You got the 1, 2, 3 drives. Low volatility. Momentum is crossed to the downside. All we want to see is expansion from here. And I do believe we'll get a shot back to the bottom side of the range, which is coming in at about 1367. What does that mean in layman's terms? Well, easy way to manage this position right here, in my opinion. Tick below 27.17. We're getting moved to $20.83. A tick above this guy, invalidation in place. And I'm still looking for this thing to come down over time. But what does that mean in a measured move? We're talking 46% down. Down, down, down to doggy town. All right, that's Ethereum Classic. Looking at it on a macro schedule. Same thing for Ethereum. This doji candle, you get a closure above or below. What does that mean? So we're in a downtrend in the first place, right? Lower high, higher low. Okay, there's one thing to note. Lower high, lower low, trend reversal again. And here's your lower low. And what would you expect? More of the same. More of the same for Ethereum, crossing down. And I believe the next stop here is going to be at about 1,087 for Ethereum, down 30% from where we're at today. And that's alongside the dollar rising. Let's take a look at what else. Phantom. What does even Phantom do? Phantom, anybody have a comment below on Phantom? I do believe some of those targets we actually went over. I'm going to get into it right here. So, real easy on this one as well. So, risk management right above the prior wick. If we do get a wick above there, I'm looking for this guy to head back up to 27 cents. A wick below here, and I'm looking for this wick to get filled down at 19 cents. Loving this one for a short position right off the green 55. Looks like we are going to come into this green 55 and you'd have a few drives of, it looks like, bullish divergence coming back from this point right there. So it would be 1, 2, get you a shot to the top side of the range. So short term, 23 cents, not 0.233. Looks like we're in the cards. What's the dollar doing now? The dollar still holding itself up above 113. That's what we want to see here on the 12-hour. We are crossed down, volatility maxed out in the bullish control zone again. The 15-minute is coming down here, and maybe we head down to about 112.65 if this region wants to break. If we hold it up here, dollar still to the moon. And Bitcoin heading up to that major pivot of 19,300 and 19,600. Those are areas to be keeping your eye on today. That green 55, if that does get defeated again on the 4-hour time frame, which we got 2 hours left, 2 hours and 22 minutes left on this guy. We are crossing up with low volatility with multiple drives of hidden bullish divergence. That may be good enough to do it. How would we confirm that divergence? Really, I want to see a 4-hour closure above 19,400, and I would say that gives us a shot up to 20,170. So easy trade right now. In my, I like to find out when I'm wrong the quickest. So, short entry right there, risk management right there at 19.5, and I'd be looking for a move back at least to the bottom side of the range at 18,400. If that breaks, the next stop is 17,500. Very, very easy trade setup right there, but with the 15-minute really pushing it up right now, there's some volatility going on in this market. And I believe it is, has to do with the, it's the Monday market morning open. We will see, usually by about 9:30 Pacific time, the market decides what it wants to do. 6:30 a.m. So the market has just opened. I'm always looking at futures. Futures are down $30. 15-minute. So the market is open. NASDAQ and S&P futures are down, but the regular ticker is up slightly. Says, BlackRock talking about the U.S. dollar climbs to yet another high. And the British pound is getting slaughtered. I don't know why my... here's another thing I wanted to point out. Tether. We talked about this. Tether dominance. What do you think happens as Tether dominance goes up? And we had a macro target on Tether dominance to 10.5%. This is a macro breakout on the monthly time frame, on the weekly time frame. Kind of looks like the US dollar. So what happens as people are flighting into Tether? Fighting. What happens? What do you think happens, guys? Put a comment below, but I'll let you know right now. As people move into Tether, low volatility, Stokes are up, getting back to the bullish control zone. What happens as Tether dominance goes up? What do you think's happening? People are selling their altcoins, they're going to Tether. That's what's happening. So if they're selling their altcoins and going to Tether, they're selling their Bitcoin, they're going to Tether, which I like Tether. Thank you to the Tether people out there. Tether is a useful product. It seems reliable. I trust Tether more than USDC, that's for sure. They're in bed with the cronies at the U.S. government. They're in bed with those guys. They're the worst. Protect and serve. I don't know if I believe that. Anyways, I'm sure there's, 90% of the people are great, but and hardworking and good Americans. But there's those other people out there that, they're not doing what's best. So let's pray for them. Anyways, Tether dominance is bullish right now. And there will be some divergence, bearish divergence here if we confirm this as a local high. So that's something to keep an eye on. The weekly is, what are we doing here? We're coming up to the 0.5. Looks like. Yeah, right up to the 0.5. So if Tether dominance closes any kind of a weekly above 8%, that's going to look bullish for kind of a new high. And for this target to get hit at 1050. How did I get that target? Let's take a look here. That doesn't look like it matches up at all. Was I on log scale? What was going on there? Auto. What is going on here? TradingView does some weird things every once in a while. So sometimes you have to adjust your screen using auto or log. But let's just measure that move out again. Again, ascending triangles have a 75% chance of breaking out to the upside. Why? We're getting higher lows, higher lows, higher lows. And what does the measure move look like on this baby? So you measure it at 50%. And that is how I got that target of 11%. So, looks like we've got a little bit more to go. Does that line up with any fibs here? Yeah, that does line up with the 3618, which more volatile moves, it could go even higher, 12.5%. All right, I think this video has been long enough for today, guys. Hope you have a blessed and highly favored day. Tune in for more tomorrow. Make sure you leave a comment below if you have any questions. Take care.